Hey everybody, welcome to our daily market update. I am doing this market update for Thursday, January 11th, 2024, but I am recording this kind of mid-afternoon on the day of the 10th. I'm doing that for a couple of reasons. Well, number one, I'm kind of getting into the habit of doing it this way now, where the evening before is when I'm actually doing the market update. That won't always be the case. Sometimes I'm going to do these very early in the morning of the actual morning that it's for. But I'm doing it this way today because tomorrow morning early on the 11th, when good hour or so before the markets are open, I will be jumping in a car with my daughter and her two dogs and driving out from my home in the Salt Lake City area to San Francisco, about 12-hour drive with the stops we have to make for dogs. And then Friday, I will be flying back to my home in Utah Friday night. So I'm doing this now because I've got some things to do this evening to get ready to go. But I want to talk mostly, I'm going to talk a little bit about what the markets did today, a little bit about what's going on in the next couple of days, kind of in the normal format that we typically do these market updates. But I mostly want to talk about the Micron spread trade and the adjustment that was sent out a little bit earlier regarding that trade. Make sure that everybody who has an opportunity to listen to this presentation knows what the plan is for Micron and why we're doing it the way we're doing it and what our expectation is and what the next move might be from here. So let's start out by talking a little bit about what the markets did today. As you can see, the Dow Jones Industrial Average had a nice solid day, a good 0.5%. That 0.5% doesn't sound like a lot, but that's a good sized move for a single day. The S&P similar, a little better than 0.5%, and the Nasdaq up 0.75%. Good day all around for the U.S. markets, and it's kind of in a way snapping what was a rough first week. So here is literally the mark of the new year right there. And we had the first week of the year, holiday shortened week. We traded down. Now we've got 2 of the first 3 days of this week. We've got the S&P 500 trading to the upside. And we still have Thursday and Friday to trade and still be interesting to see what happens. Tomorrow's going to be especially, I say tomorrow, because it is tomorrow from the time I'm recording this, but it is part of today's, the 11th update. I'm not making any sense with that. I'm probably confusing the issue. For the trading day of the 11th, it's going to be an interesting day primarily because prior to the open of the market, we're going to get the CPI data that is going to come out. That is going to come out about 1 hour before the U.S. market opens. And I don't know. Yesterday I said maybe it's a bigger deal than it has been for a while. The CPI has been a big deal for quite some time because of inflation. What might be a little bit different this time, it's the first time in a number of months, probably 11 or 12 months, that the expectation is that the month over month is going to increase just a little bit, that the year over year is going to increase a little bit. Now, when they take out food and energy, they expect it to maybe go down a fraction, and that might be kind of an evening or balancing thing. But the whole of CPI data is expected to go up just a fraction. The only thing that's really going to rock this market tomorrow and possibly frighten people and really send it down is if this number comes in much, much higher than expected. The consensus is 0.2% up from month over month and 3.2% up year over year. This number would have to come in probably at 0.4 or 0.5 or higher, and this number would probably have to be a 3.5 or higher to really shake the markets and really rattle the markets. And the reason it will shake the markets is it's not going to be a surprise to anyone that inflation is ticking back up. I think it's kind of semi-baked in and kind of expected. The shock to the market is going to be what it does to the expectation of Fed rate cuts. Remember, the Fed has said definitively that they are leaving the door open for another possible rate increase. The expectation for January meeting at the end of this month is that rates stay the same. Current rate is 525 to 550, and that's what most people expect it to be. A very small percentage of people expect a rate decrease. But when you start moving out to the subsequent months, now you've got 65, if you count the nut jobs that think a 50 basis point rate decrease might come along. If you add that to it, you've got 67, almost 68% expect a rate cut in March. And I think you have even more than that expect a rate cut in May, and then maybe even more than that expect a rate cut in June. And this is incredibly speculative. It's just I think this is probably pretty accurate. I think there's not a rate cut coming at the end of this month, but I'm not sure there's going to be a rate cut in March or May either if inflation numbers tick up more than expected this month, or if there's 2 or 3 months in a row where they tick up. For example, that again, an expectation of a very, very slight uptick in inflation numbers tomorrow. But if a month from now there was another uptick in inflation, and a month after that another uptick in inflation, even if it was in line with what the consensus estimate is, you've had this going on. You had the super high skyrocketing inflation. Now it's dropped off and the rate of inflation has slowed. Remember, this is still prices going up. This is still an increase in prices of by 3.2%. So it's not that prices of things are going down, it's that they're not going up as fast. If the speed of inflation picked up just a little bit, doesn't have to go back to this type of an upswing. If it just got a little bit steeper than what it's been, and started to do something like that over 2 or 3 months, it's going to squash every expectation and blow up everybody's dream that the Fed is going to do 6 rate decreases this year. I mean, there are still people out there saying 6 rate decreases this year, and I think that's absolutely insanity. I think maybe towards the second half of the year and into the second half of the year, you might get 2 or 3 rate decreases. But 6 rate decreases, the only reason the Fed would have to do 6 rate decreases is if we're going into a serious recession. And last year, everyone's prediction of a 2023 recession proved to be wrong. People are being much more cautious in predicting recession this year, and they're probably going to be wrong again because it's probably coming. And that's the only way you get 6 rate decreases. So this number tomorrow may hold a little bit more significance if it's off by very much. I think it's kind of a big deal that the expectation is it's going to go up a little bit, because again, that would be the first time it's going up in some time now, or increasing its speed of going up. But if you get a number that's, like I said, month over month, 0.4, 0.5, 0.6, something like that, you could really see the markets get rocked tomorrow. If the number is pretty much in line, even though it would be ticking up a fraction from the previous one, if it's pretty much in line with expectations, then I expect this week to finish not super strong to the upside, but I expect it to finish up by where it's at. Maybe a couple of days that are a little bit to the flat side or slightly to the upside on all 3 indexes, S&P, NASDAQ, and Dow Jones Industrial Average. So going to be an interesting day on the 11th based on what those CPI numbers. I'll be listening intently probably be listening to Sirius Satellite Radio, Fox Business News, or CNBC, but I'll be doing it somewhere in the northern Nevada desert between Salt Lake City, Utah, and the Reno Tahoe area. Not until we get there do we start edging back south a little bit towards Sacramento and San Francisco. So anyway, wish me luck on a 12-hour drive tomorrow. All right, let's talk about Micron. I sent out a trade adjustment earlier, and this needs to be the focus of the rest of this presentation, the rest of this monologue. It's kind of weird that Micron exists in the same space as NVIDIA, as Intel, as AMD. It's in there with those chip manufacturers, which have been moving nicely to the upside over the past couple of days. And yet Micron has had this kind of, I'm going to say, kind of inexplicable sell off. And I say inexplicable because I have not found a justifiable reason for Micron to be selling off. The volume on it has not been real high. Um, Micron is going to be a huge beneficiary of some of the money that has been slated. Remember that chip deal that the government did that we were talking about back during the summertime? Micron is going to be one of the bigger recipients uh, of that money, and Micron is poised to do, in my opinion, every bit as well as someone like Nvidia or AMD. Now, in all fairness, AMD did sell off a little bit today. So I can't say that it was just, not AMC, AMD. I can't say that it was just Micron. But yesterday it was just Micron. AMD was up nicely, Nvidia was up nicely, and Micron was selling off. And the move down today on AMD was only about 0.5%, whereas Micron was 1.1%. Now, I firmly believe, and there's always a possibility that I'm wrong on this type of thing, because it is an educated guess. I firmly believe, I don't have a way to zoom in on this, but I'm going to circle it for you. If you look at where Micron finished, the right hash mark on that OHLC bar is right on the 20-day moving average. To me, I see that as a sign of the 20-day moving average likely holding up as the support level. My expectation is that when the market opens on the 11th, barring some ugly CPI data, because that could flip all my expectations completely on their head. So barring that happening, if the CPI numbers come in about where they're expected, or maybe we could always be surprised with a little bit better than expected number. If that happens and the market is rallying or even just kind of flat, I think in the next couple of days, Micron is going to bounce, and I think they're going to make that turn. And I think by the end of the day on Friday, they're probably going to be up here close to 85, if not above it. Problem is, that's an educated guess, and we cannot take that chance. If you already looked at the adjustment that I sent out earlier tonight, and I'm going to actually pull it up for you to look at here. Let me bring this in on another screen. I'm just going to open up my Word document. I sent it out to you in a PDF, but let me change the screen here. Give me a second. If you take a peek at this, you see that we're taking the 82 strike long call and the 85 strike short call, both expiring tomorrow, or not tomorrow, well, if you're listening to this on Thursday morning, it is tomorrow. If you're listening to it tonight, it's Friday. Expiring on Friday, we're rolling both of those straight out in time, and just simply we're leaving them at the same strike prices. So the 82 long will still be an 82 long. The 85 short will still be an 85 short. We're just moving them out 1 week, and it's only going to cost us about 25 cents per share. Now, that's pending a big move in pre-market tomorrow. And if Micron started the day way up or way down from where it finished the day today, that can affect that price of 25 cents. And even though I'll be in my car between Utah and California, I will be on Discord. I will answer emails where I have coverage, and I'm not just going to leave everything hanging during the day tomorrow. And don't forget, we also have Thursday night, Friday morning that we could make an adjustment if we needed to. But this is the adjustment that we're going to make, simply because we cannot take a chance on Micron not doing what I expected to do. I really do believe that it's going to bounce tomorrow, Thursday and Friday. I think you're going to get a bounce, but I can't risk not getting a bounce. So this is what the trade originally looked like. This was the original fill price on the 4 legs of the option. I have already entered the adjustment in these 2 rows right here, and that has already changed the maximum risk. So if we get filled for that 25 cents, this is what the new trade will be. And that means we still have a possibility of 43 cents per share as possible profit. I don't know if we're going to target 43% profit. I believe if we get filled for that 25 cents and Micron makes a move back above 85, I think once we're break even or maybe 5 to 10% profit in this trade, we will probably exit it. If we make this adjustment tomorrow morning and by the end of the day tomorrow, Micron has rebounded and bounced the way I think it's going to, and we're sitting up around 85, I'm exiting that trade on Friday morning. If we get some movement up on Thursday, and then we get some more movement up on Friday, I'm probably going to put a close order in for Monday morning, and not worry about profit, but rather focus on our ability to get back to break even. So that is the plan with Micron, and that's the main reason I'm recording this as early as I am, because where you already got the adjustment sent out to you, I wanted to make sure you knew what I was thinking and what the plan is on Micron. Now, there's one additional thing I want to talk to you about. I almost pulled the trigger on this because I do feel relatively strong, like I said, about Micron holding. I know it dipped below it briefly today, but I believe 82 is going to be that support line. You can see it was resistance here a little bit. It's already sort of tested as support right here. The 20-day moving average is a little bit above 82. I don't believe Micron's going down below 82. I was really tempted to include in this adjustment a roll of the short put, leaving it in Friday's expiration, but rolling the short put straight up from the 78 strike price to an 82 strike price. And there was somewhere in the neighborhood, now early in the day, there was almost 75 cents per share credit in being able to do that. I don't know what it is right now. The reason I held off on doing that, actually, I'll tell you what it is right now. If we took that 78 put, give me a second, I'm just doing this on another screen, and we kept it in the same expiration date and rolled it up to an 82 put, there is still about 58 or 59 cents of potential credit there. Now think about this. We spend 25 cents to roll the call side out. If we were to take in an additional, let's say even 50 cents per share, if we were to take in an additional 50 cents per share, rolling this 78 up to an 82 strike, and between now and the end of the day, Friday, the stock price remained above 82 and our entire put side simply expired worthless, this drops down by 25 cents, or actually by 50 cents, because we've already this is already factored in the 25 cents it's going to take to roll the call side out. If we drop that by 50 cents and this became 207, our theoretical break even point becomes 8407. 8407 becomes our theoretical break even point. In other words, we don't need the stock to go way up high. We don't need it to go way up high and get up over 85 to be guaranteed a break even or a profit. So tomorrow morning, even though I will be out on the road, I may stop somewhere along the way. If I've got a good cell signal, I can use my cell phone as a hotspot. I can turn on my laptop, and I may send something out on Discord with a midday adjustment of a roll of that short put. But and we probably won't get as much as 50 cents if the stock is moving up in price, but it may be a worthwhile adjustment to look at, even if all we could do is get another 20 or 30 cents if it's trending up and doing what I'm expecting it to do. Now, if I'm dead flat wrong and this thing continues to trend down, we still make the adjustment to the call side of the trade tomorrow morning, or the morning of the 11th. Again, you might be listening to this on the morning of the 11th. I don't want you thinking do the adjustment on the 12th. Make this adjustment on the morning of the 11th before the market opens. If Micron continues to sell off and I'm wrong and 82 does not hold as a support level or give us a bounce, we will maybe get a little more value back in the put side of the trade, possibly enough to close the put side on Friday morning for more than what it's worth right now, then we can work on adjusting the call side if needed, possibly turning it into a bear call if Micron continues to sell off. Or we could simply roll the put side out just like we did the call side. And so we still have, even though it's just a couple of days, we still have some time to make further adjustments to this trade if needed. So that's where we're at with Micron. I know it looks kind of ugly being down almost 50%, but I think this trade's going to turn quickly in the next couple of days. Still going to go through with the adjustment, and I think we'll end up break even or profitable on this trade. And what that will ultimately do is help our 2023 results. This percentage for 2023 factors in the fact that we're down $900 on Micron. I just want to show you something really quickly. Now, it also factors that we've had a nice increase on Walmart the last couple of days. If we were to get this back to a break even, makes our net return for 2023 113%. That'll be one of the better years we've had on spread trades ever at Safe Option Strategies. So keep that in mind. Even just getting back to a break even makes for a great way to wrap things up for last year. All right. I'm going to wrap up right there. I hope everybody has a great Thursday. Late on Thursday evening or really early on Friday morning, I will do another one of these market updates for Friday. I'll just be spending the day in San Francisco and then flying back to Salt Lake on Friday evening. So have a great Thursday. Have a great Friday, everybody. We'll be back again with another one tomorrow. Bye-bye.